866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey trader, want to get rich quick? Well, good luck with that. If on the other hand you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 23rd day of October, 2019. Thanks so much for joining us today. Whoever you are, wherever you are, we're just glad you're right here, right now. I'm going to put up a chart of the S&P 500 Emini Futures. If you cannot see the chart, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. On the days you're out of the office, away from your desktop, just point your browser, any internet-connected browser, to youtube.com/CFRN/live. There you'll find a live, real-time simulcast of the show as it unfolds, brought to you by the good folks at YouTube. Thanks, YouTube. Now, along with being able to watch the show live there, if you drop the live part when the show's not live and just go to youtube.com/CFRN, you'll find an archived recording of each and every daily radio broadcast for the last 3, 4, 5 years. Whole lot of them. We've been doing this live daily broadcast since 2005. Back in the day, before we had video and charts during the show, it was just audio, typical standard radio / podcast, but the times have changed. So you can go to iTunes and catch all those old podcasts. You can jump over to youtube.com/CFRN, see what we've been up to over the last few years. What you'll find most interesting, I believe, jump back a year, 2 years. Listen to what we have to say. Listen to the words that we use. Have a close look at the trade setups that we show you, the indicators, the terminology. If I didn't tell you the date at the beginning of each show, you might not be able to tell them apart because nothing's changed. If something's not broken, no reason to try to fix it. And what we do seems to be working just fine. So we're not going to tweak anything. We're not going to change anything. We're going to keep it as simple as we possibly can. Everything that we do is not only fluid across all markets and all time frames, it's simple by design. Okay? All right, we are looking at an S&P 500 Emini Futures daily chart. Now, the fibs are already up on the chart. Most recent swing low, August 6th, are the one that we're using for this purpose. Right here, August 6th. Up to the swing high, right here. Not an all-time historic high, but the most recent swing high. Here's that all-time historic high. Okay. Now, from that low to that high, we hit a 62% Fibonacci retracement, which launched a pretty good rally. If we look at just the last leg up on the daily, and because of that little wick from yesterday, I have to adjust this one to compensate for that slightly higher high that we put in yesterday. Okay? So on just the last leg up, we've got a 38% Fibonacci retracement at roughly 29.65, which happens to coincide with the 24% Fibonacci retracement for this entire move. Confluence, congruence, people have different terms for it, but I think you see what I'm talking about. Okay, now what do we got here? Okay, well, okay, up here we've got, again, the 38%. I may have misspoke that. We've got the 38% Fibonacci retracement on just the last leg, lining up with the 24% fib. This is on the daily chart of the entire move. Where do we again find this confluence, this congruence? Not here at the 50, but here, okay, at the 62 of the last leg up. That also lines up with the 38 of the entire move. When you get overlap, and that expensive fib software, $20,000 that I mentioned from time to time, that's really what it's doing, is it's helping you to compare different time frames, different market structure, like I just showed you here. See, and you can do that for free, okay? I'm not knocking their software. I'm sure it does exactly what it was created to do. But if you don't have an extra 20 grand rattling around in your pants pocket, use the tool that comes with every trading platform I've ever seen has a free fib tool. Not only the retracement tool, but the extension tool, which we took a look at yesterday. Let's just grab that real quick. We'll go from this low to that high. We'll grab the little medallion there if we can. And I'm going to pull that to the swing low. Now, what this is telling us, if we can get a 100% duplication, or a measured move as it's called, which would be the same as the distance from here to here, applied from here to here, well, that puts the S&P 500 E-mini futures up at 3,100. We're still battling it out with the 3,000 round number. If we can take out yesterday's high, if we can take out this little double top that was put in on September 19th and September 12th respectively, if we can take those out, then we get to challenge the all-time historic high, which over time will lead us here. Now, that 3,100 round number, we will get there. Make no mistake about it, we will get there. How can I say that? Well, you're looking at the S&P 500, which is a best-of-breed index. 500 large cap companies that were selected to be a part of the index, not just because of their market capitalization, but the jury over there at Standard & Poor's, they have a laundry list of qualifications. They only want the best, the brightest, the healthiest in the index. When one of those companies that have been placed in the S&P 500 index, if they start to stumble, fall, miss their numbers a few times, just not looking so good, they will unceremoniously kick them to the curb and replace them with a fresh, strong bull. So what that means is, over time, the S&P 500 will climb. Go back to the inception of the S&P 500 E-mini or any of the other indexes, you'll notice on every one of them that price action starts in the lower left-hand corner of your screen and ends in the upper right-hand corner. Now, I'm not saying that we don't have pullbacks and retracements and crashes and flash crashes and all those other kinds of things. We do. That's just how markets work. But over time, because it's a best-of-breed index, it is built, maintained, programmed, if you will, to always go higher over time. So if you were forced to take a position in the S&P 500 and you had to choose to be long for the next year or short for the next year, and you couldn't touch it in between, you got to be on the long side of the market. Because look at 2008. Boy, we really fell out of bed. S&P 500 index went from 1,500 and change to 666. That's a true story. But then, look where we are today. From the pre-crash high, 2007 was it? We've doubled that. After a pretty tough crash. There was blood in the streets. Fear was everywhere. Many of us thought, is the sky really falling this time? It did, but only for a minute or a couple years. But look where we are today. That's how it works. That's how it plays out. So keep that in mind. Let me give you the numbers from around the world. When I come back here in a moment, we'll get into detail on the Concierge Trade Alerts and the Logic 247. Of course, we'll talk to John. But for right now, let me just give you the cash numbers. Okay, ready? Here we go. Currently, the Dow's up 13 points. NASDAQ is up 2. S&P 500 is up 3. And the Russell 2000 also up 3. In the commodity basket, crude oil up 72 cents, trading 55.20 last. That's a gain of a little better than 1.25%. We did have crude inventory numbers today. I'm sure Michael will discuss that with you when he comes on here in a moment. Gold up $9.30. Go gold, trading 14.9680 last. In the Asian markets at the close, Nikkei posted a gain of 76 points. Shanghai lost 12, and the Hang Seng was down 219 points. And for the Hang Seng, that's a loss of almost 1%. In the European markets at the close, FTSE posted a gain of 48 points. The DAX gained 43. The CAC lost 4.25. Now that gives us a mixed day in Asia, mixed day in the UK. So far, it is a big green radio Wednesday here in the US of A. Let's go to Michael, get a recap. Oh, you know what? Everybody in the live training room this morning got a special treat. Michael had some business to take care of. Valerie took over. She slid right into that trainer seat and did a fantastic job. Valerie, that bell's for you. Very proud of you. Your ability, your skill set. Michael and I have both watched you grow and mature as a trader and now a teacher over these past few years, and I just got to say, we could not be more proud of you. With that, Michael, take it away, and I'll do my very best to be here when you're done.
Okay, I will take it away. Now, today is going to be a little bit different than normal. I'm just going to go over the trade setups that happened, not the trade setups that we took, because I was gone for most of the morning session, sadly. But Valerie did do a great job. She really did. It was funny because I was able to listen to her while I was waiting for my phone call. And I was able to listen to her for the first time. And she's like a mini-me. She is. And she was saying pretty much all the same things that I say. Every now and then I was able to turn my mic on and say, okay, and this, but, not to correct her. And she was doing a great job. All right, so I'm not going to show, well, I will show the spreadsheet, but it's not going to include today. All right, Valerie was positive, I think at least 20 ticks today. And when I got on, I only had a few minutes, and I had one stop out and one break-even trade. But anyway, if you have not taken the free trial and you want to take the free trial, go to the homepage at CFRN.net, and right over here in the right-hand column it says 5-day free trial apply.cfrn.net. If you click on that or this thing down here, any one of those things, it's going to take you to this page. This page, okay, and that page is still working. This is incognito window. I don't know why it doesn't work on a regular window for me. But anyway, put in your name, your email, and your phone number. Hit register now, and you will be sent a confirmation link. You must click on the confirmation link. If you don't click that, we don't know that you took the free trial. Okay, you got to click that, and then you'll be sent all the information you need. Now, this is the spreadsheet. It doesn't include today. All right. So far this month, not including today, which was a positive day if you went with Valerie's and my results together. But this is my spreadsheet. And the integrity of this spreadsheet is mine. And I fill it out every single day. And so on the month now, we're up 2172.5. That's over 18 days. Averaging 135 per day. On the year, now we're up 30,603. That's over 191 days, averaging 160 per day. Okay. Now today is not in there. That's why that's not 17. So what I'm going to do today, because I wasn't there this morning, is just go through all the trade setups that did happen. Okay. Now, it was a pretty nasty day, it looks like. But Valerie, I watched her this morning. She nailed a couple of trades, got the goal for the day in 7 minutes. But there was no trade here, no trade here, no trade here, and a long opportunity right here that would have been break even. Not trending enough there. Then a bunch of garbage. Then I stopped out right there, pretty much to the tick. And then it went down, so I could have gotten my stop to break even. And it was just garbage after that. So gold was a miss today. Okay, if gold was a miss, I'm sure the euro was probably too. The euro started out right in here. Nothing going on. There was a shorting opportunity right there. Good enough to get your stop to break even. And during the break, a long opportunity right here. Let me just check, make sure I'm not in any trades right now. No, I'm not, because I dragged it out this morning and I went a little over. So there was really, and literally, the markets were just garbage today. This is crude oil, and this is where Valerie made her money today, I think. We did have crude inventories come out. Okay. And when I came on this morning, I think this right here is where she got her goal for the day on the first trade. And she picked up 10 ticks there. And then there was a follow-up trade right there. And then it was pretty messy until the crude inventories came out. The crude inventories came out, and you can see what happened here all within a minute. All the way over to here within a minute. So, when the crude inventories come out, you got to kind of wait a little bit. All right. And I got back at 11, and there was a shorting opportunity right there. I took a break even on, and along there, I took one tick on. I'm not putting any of that in the spreadsheet. Okay. And then during the break, there was really nothing. Okay. Now the ES, this 3,000 level right here is going to be a stickler for a little while until we start moving up significantly with some momentum. This 3,000 level is going to be a stickler for a little while. I thought yesterday that we were going to put in new highs, new all-time highs, but instead it failed off of this weekly trading zone. Okay, and once it failed off that zone, not only did it go down to the zone below, but it went down to the zone below. It went down 2 zones. So today, let's just take a look at it, because I haven't yet. And we'll see. The market's opened up right here. And there was no trade set up. No trade set up. There was a long right here on this up close. And the reason that was a long was because it was an up close above that trend line. And if you have any argument about that, it would be that it was that trend line. But we'll give it the extra tick and say it was that trend line. And it moved up. It got really choppy. It didn't give up anything. Started to move down, and there was a short. It just moved over. There was a short from right here for about a point. And then it just got back up and got choppy. And that was the whole day. So if I was going to miss a day, well, I'm glad Valerie got the points early. And I hope everybody that was with her in the room this morning got the points with her, because she was doing it right. And, it's funny to hear her talking, saying the same exact words that I say over and over again. Everybody's got to get that in their head. You just got to get it in your head like it's in hers. And then you will be consistent. You will be doing the same thing over and over again. Whether it's working out for you or not, I can't guarantee. But at least you'll be consistent. Okay. And with that, let me go back to the spreadsheet really quick. Because I've been doing this for years. And I've been seeing the same things over and over again. And she pretty much nailed it today. Today is not the 22nd, it's the 23rd. But on the month, we're up $2,172, averaging $135 per day. And on the year, we're at $30,603. It's over 191 days, averaging $160 per day. Okay. If you have not taken a free trial with us, I can do this incognito window again. If you have not taken a free trial with us, go to the homepage at CFRN.net. Over here in the right-hand column, it says 5-day free trial, apply.cfrn.net. If you click on that, you will be brought to this page where all we ask for is your name, your email, your phone number. Hit the register now button, and you'll be sent a confirmation link. You must click on the confirmation link. Okay, if you don't click the confirmation link, we don't know that you took the free trial. So you got to do that. All right. All right. And with that, we can pass it back out to fabulous Phoenix, Arizona, overlooking South Mountain, Studio A, America's largest city park. Dwayne, if you are ready.
Ready we are.
Okay. I'm still waiting for that extra phone call.
Okay. No, we got him. All right. Recap of the recap. Valerie got the points, right?
Valerie got the points. 7 minutes this morning. 7 minutes in one trade. That's for you, Valerie.
That bell's for you.
7 minutes in one trade. I watched it happen.
Okay.
Thank you. It was fun. Oh, it's not supposed to be fun.
No, you don't.
Okay.
You don't put emotion in it. Whether it's good or bad, there's no emotion.
There's nothing wrong with having a smile on your face.
Put the trades on.
All
Right. It was a good opportunity. Thanks, guys.
You betcha. Thank you. Okie doke. We've talked about the S&P big picture on the daily. So now we're going to take a look at the Concierge Trade Alerts from last night. If you would like to grab a screenshot, by all means, grab away. 5, 4, 3, 2, 1. Okay. So we're going to go from the daily chart to the 30-minute. Okay. And I'm going to roll it back here a moment to Sunday night. There's the Globex open. Okay. We opened right into a weekly trading zone, consolidated, and I highlighted these yesterday: consolidation, rejection, consolidation, rejection. When price reaches a weekly trading zone, only one of three things will happen. Now, that doesn't matter whether we approach from below or when we approach from above. You're either going to see consolidation, rejection, or the slice. And I highlighted the slice on one of these charts yesterday, and when I have a good example of it, I'll point it out to you. Okay? So if you can remember that, first remember this: price is always trying to get somewhere. From Sunday night at 6 p.m. Eastern to Friday afternoon at 5 p.m. Eastern, price is trying to get somewhere. The weekly trading zones provide all of the CFRN traders with destinations along the way on that journey. Once we publish the zones Monday morning at 6:15 a.m. Eastern, we don't change them, massage them, manipulate them. They're carved in stone for the entire week. We've been publishing the zones every Monday since December 14th of 2009, coming up on our 10-year anniversary. My, how time flies. So beginning Sunday night, we go from zone to zone to zone. Back to the zone, back up to the zone, back down to the zone. Now, when price approaches a zone from above, we expect it to be good support until it isn't. When we approach a zone from below, we expect that to be good resistance until it isn't. This is what it looks like when it is, and this is when it isn't. This is when it is. This is when it is. This is when it is, and that's when it isn't. If price is always on the move, and you have a reasonable idea of where it's headed, That doesn't make the job easy, because there is no easy button in the world of trading. But I promise you, it does make it simple. Once we teach you how to discern, through the use of our methodology and indicators, which zone price is currently trying to get to, your job then, using the indicators, is to enter that move at a spot that represents high probability and low risk. Okay? I'll put the indicators on in a second, show you exactly what I mean. But again, consolidation at the zone, leg retracement, rejected by the zone. So when we start this move, right, we understand price is trying to get to the zone overhead. When we get our pullback, which we always expect, and price gets rejected, that confirms what price is trying to do, and that's get to the zone overhead, which it did. We consolidated for about 2.5 hours, no more than that. 1, 2, 3, 4, 5, 6, 7, about 4 hours. Okay. We get above the zone. Notice this candle here. You got nothing touching the zone. Leg, retracement, rejection. It tells us price is trying to get to the zone overhead, and it did. We consolidated and consolidated. When price cannot get through a zone, whether it's the one overhead or the one below, when it can't get through, it has no choice but to turn around and go the other direction. And when it can't get through this one, it has no choice but to turn around and go in the other direction. And when it can't get through here, it has no choice but to head in the other direction. Where in this case it consolidated, no surprise. And then, over the course of an hour and a half, made the trip from 3,000 to 29.89. That's an 11-point move, zone to zone. This happens to be an 11-point move as well. Going back to Sunday night, okay, that's an 11-point move. 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 What is that? 1, 2, 3, 4, 5, 6. What you're looking at right there, since the Sunday night Globex Open, is 66 S&P 500 E-mini points at $50 per point. Alexa, 66 times 50, please. Alexa, 66 times 50, please.
66 times 50 is 3,300.
Thank you, and good morning.
You bet. Happy Wednesday.
She's such a lovely digital assistant. Okay. All right, so you guys starting to get the flow of this, getting the hang of it. Okay. Now, but wait, there's more. I'll show you more in a minute. Let's scoot over here, where we find more consolidation. And then we take an 11-point move back up to the zone overhead, where we've been consolidating now for a couple of hours. If price cannot get through this zone, guess where it'll go? That's right, back to the zone below. And if it can't get through that zone, it'll head back up. If it gets through this zone, then it will be heading for the zone overhead. Now, this looks choreographed. It looks as though someone might have looked at the market this morning and threw some lines up there, you know, highlighting the highs and the lows of each one of these swings. But I assure you, these numbers, these zones, were in each and every CFRN trader's inbox and in our private Telegram channel Monday morning 6:15 a.m. Eastern. The amazing thing about the weekly trading zones, one of the many amazing things, is that price behaves around a zone the same way it was behaving December 14th of 2009, and the same way it's behaved each and every week since then. Now, price doesn't always turn right at the zone. We don't want to get lulled into a false sense of complacency, because zones are an area, even though there's an exact number on the chart. See how we came a little bit shy right there? Swing low was 29.89.5. So 2 ticks away from the zone, and it turned. That'll happen. So be aware of that. Be prepared for that. Okay? Now, again, we're consolidating at the zone. Price, once it makes up its mind what it's going to do, and that will be dictated by the order flow. Order flow, you can look at it in your DOM, and you'll see buyers and sellers. That's what moves price. Okay? Now, I know that some folks will create the illusion that a specific indicator or an oscillator actually moves the market, but that's just not true. An indicator or an oscillator can give you a good idea of what's happening, okay? But the indicator and the oscillator has no power to move the market. Neither do I, neither do you. Only order flow can dictate market movement. The fact that the zones provide a framework that helps our traders know where price is trying to go, and when it gets there. Again, it doesn't make trading easy, but it does make it pretty simple. Last night on the S&P, Concierge Trade Alerts said to consider being long 3003. We've not touched 3003. And the alerts got out last night at 8 p.m. Eastern, so that's 2000 right there. Okay? Now, we consolidated for an hour, 2 hours, 3 hours, 4 hours, 5 hours, and then we put in a leg and a retracement, support, back up. Okay? Now, on the short side, consider being short 29.86. 29.86 is right there. Okay? Now, it was on this candle that we triggered, and it took us down to 29.82. So that's a 4-point move. Important prices, important areas are almost always tested. Triggers a second time. This time we only dropped to 29.8375. Okay, so that's 2.25 points. A 4-point move, 2.25 point move. Long side has not triggered. Swing high so far 302.5. 303 is the trigger on the long side. Now let me show you one last thing before we leave the S&P chart, and that would be this. Okay.
John is in, by the way.
Okay. Go ahead and open up his mic.
Okay.
I will pick up right here, folks. As soon as we finish talking to John, we're going to go through the Concierge Trade Alerts, which are the static report that comes out every evening shortly after the Globex Open. The numbers are good for the entire session. We often see two-sided action, which means we'll trigger on the long and the short side during one session. The Logic 247 alerts are the dynamic, real-time, in the moment, as opportunity develops around the globe, around the clock. Your phone or your computer will go dee-dee-dee, and there it will say something that looks a little something like this. And I'll show you. We are currently in week 64. So Sunday night. John, you there? All right, John's not there. He's got an open mic.
Open, though.
Yeah, that's fine.
Yeah.
He'll pop in when he's ready. Okay,
Yeah, I'm
okay.
here. Yeah. Hi.
Oh, there.
Hey, John. Welcome to the show.
Thanks. It's kind of interesting because the market got beaten down a bit last night going into the close. It was a potential mini version of some of the reversals we saw in 2007, 2008, before a big beatdown, but nothing quite as drastic. Back then we had situations, remember the Dow was a lot lower, sort of go up maybe 150 points and end up down 200 on the day in a big reversal. We kind of had a mini version of that yesterday, where if you remember, we said the market was at a critical point where it might, kind of tank a bit. It did go into a little bit of a swoon going into the close, and we're certainly off the highs of yesterday quite a bit. And I did point out that it's kind of a hodgepodge. There was some strong stocks yesterday and some weak stocks, but the weaker stocks sort of led to a downturn. Today, the situation, look, the market doesn't want to quit. It's trying to rally here. We're back positive on the S&P and the mid-caps and stuff, and the Dow, and the NASDAQ today. But the semiconductors are down, and the actual tech indices are down, and the financials are down as well. So if we were to roll over from here, I'd be concerned, to be honest with you. But I wouldn't say this market is exhibiting, early signs of a bear market or anything like that at this point, because there seems to be support. Even last night, Roku got a bit weak. It didn't kind of crack too much. And we did a nice job yesterday, if you don't mind my saying, of getting people into the gold stocks right near the lows. And we had a great move up last night. We had that doji we pointed out. I got quite a few people in before the close of trading yesterday. And we're pretty much out near the highs today. I'd be going back in if the gold continues higher. I'm not 100% sold on the gold just yet. This may be just another rally, and there could be some more work to be done. But it certainly showed that the bottom. Look, we had a bad day down the first day. We didn't really break yesterday and ended up kind of rallying. And we're sort of back up towards, we just shy of 1,500 this morning. So gold seems to like the 1,500 number. And the silver likes the 17.5 right now. These are two very good prices. What I also said a while ago is you're probably going to see the economy improving, in this quarter. And there are certainly indications that that's happening. We had an incredible unemployment rate, 3.5%. Very tight labor market. We had some PMIs and things that got close to, worse the readings in some time, but they're potentially reboundable. The bond market is it's right there at the brink at the moment, around 160. If it breaks down, that would be a sign that the economy is definitely getting stronger. A weaker dollar, in a way, could mean the economy is getting stronger as well. The currencies are fairly firm today. I think the dollar, if it breaks 97, we're probably going to see 96. We may get a run down to 94, like we said yesterday.
Here's the dollar on a daily chart.
Yeah, that little rally that we've got going there, if that breaks,
I lean on the side of breaking. It's not very convincing yet.
Towards the end of the week, maybe tomorrow and Friday, that could mean that the gold and silver could pick up. Right now, still I'm not convinced the gold is ready to go just yet, but it's certainly a better place than it was yesterday. There are two standouts.
There's gold on a daily.
Right, and
look at its head up over that trend line.
Listen. Today's highs are really important now with the 1,500. If that goes, and if the gold stocks go to new highs today, I think you're in for a very big rally, at the beginning of a very big rally, put it that way. Two situations are pretty outstanding today. We've talked about the platinum. It kind of ran up to 1,000 from 800, called the bottom at 800, called the top at 1,000. Suggested that keep an eye on it, around the 900 level, got down to 890 something, and now it's all of a sudden up $25 today. Very, very strong move to 922. I think what this tells us is that the test, and I said, it's a little bit like the previous time. You see how we were sort of hanging around and then we suddenly went crazy? Mm-hmm. I think we're at the beginning of another big move where actually it's sort of almost like 200 points up, 100 points down, right? Mm-hmm. So we went from 800 up to 1,000, so it's 2 steps up, 1 step down. I think the next target now is 1,100 on the platinum, and maybe even 12. And if we start going 1,200 and the platinum starts accelerating, catching up with the gold, there's nothing in the world more bullish than that. It's just gonna be manna from heaven for anybody involved in the metals. So that's kind of what I foresee. I think getting back up towards probably getting over 950, the path of least resistance probably going to be higher. I think it's going to go through 1,000 like a knife through butter. And you're probably going to see a pretty rapid run to 1,100. The palladium is right up there in the 1,700 now. So the platinum is becoming very affordable, if you like,
There's
compared to palladium
on a daily.
Right. So, and what an amazing move from that 1,400. I mean, look at that. This is what makes trading so hard. You get this knockout move at the end of July. And all of a sudden, the market just turns and is on a whole new uptrend. That is, pretty bullish. And this kind of step ladder type of uptrend usually means the next is going to be a kind of a spike, move higher into the 1800s, maybe even 19 towards 2000. So you could almost say that there's a pretty good chance that platinum will hit 1900 to 2000 before the end of the year. And if that's the case, it's probably going to mean that we got about 2400 on platinum next year, sometime next year. Palladium. The other thing that's going on today, which again is a sign of an improving economy for sure, is the copper price is up 4 cents. And there is a strike going on at one of these smelters, Azarco, right now, which may be affecting the price as well of copper. And we also mentioned cotton. We kind of picked the bottom. We picked the bottom of copper and cotton recently. Back in August, back in the summer, and cotton now is really picking up a lot. So the guy who's selling the pillows and the sheets, the Egyptian sheets,
right.
must be doing a great job.
Mike Lindell.
Yeah. And
recovering crackhead.
Right.
That's how he introduces himself.
What was that again?
Recovering crackhead.
Oh, reform.
Yeah.
Recovering.
Yeah.
Hopefully it's recovered.
Yeah.
Yeah. Anyway,
he seems like a real nice guy.
No, he's a great guy, and he's a big supporter of Trump. Soybeans. The grains look to me. We got a very good bottom on the grains developing today, and it kind of looks like there's another leg up ahead. I don't know if you heard Trump talk about an hour ago.
No, I didn't.
Well, it looks like he's, look, at the expense of the U.S. pulling out of Syria, which a lot of people don't like, because the Russians have kind of gotten in, where instead it seems to be leading to a peaceful outcome, and it's could be quite an accomplishment for Trump. I mean, remains to be seen, but it's a positive development, put it that way. So, what else? The oil is up pretty sharply today. I guess another sign of economic strength. There was
the inventory numbers today. Let me share those with the audience. Every Wednesday, guys, crude inventory numbers come out, and if it's a hit or a miss, it usually will affect the price of crude, and we like to be flat ahead of that, only because of the uncertainty that's involved. So today, this morning, 10:30 Eastern, the forecast was 2.232 million. Previous was 9.28. And we came in at minus 1.699. That's a pretty big miss. I'm surprised we didn't see more movement than we did. We're expecting a build of 2.232. We got a draw of 1.69. That's a big one. I'll bring up the crude chart.
Yeah, so that's a pretty big deal. The crude, look, there's that, and then there's the lumber. Look at the lumber just going through 400. That's the highest lumber's been in a long, long time. Another sign of economic strength. So the metals, just the metals themselves going up, I think is very good. The copper is really starting to look pretty. Maybe we should take a look at the copper chart as well. Look at the lumber. The lumber really now looks like it's headed for about 440.
Yeah, I had the copper up just a second ago. Let me put it back up. Here we go. There you go.
Yeah, it really looks. It's kind of like a head and shoulders bottom, and I think copper is going higher from here. This is a pretty big deal because even if there is a strike going on, they're going to have a lot of backlog, and there's nothing like a strike to kind of get a bull market going.
Yeah, if copper can take out this swing high right here,
right. And this may be part of the platinum. There may be some trouble going on in South Africa with the platinum or something too.
It's about 9 cents of movement, a window of opportunity, folks. Right here, copper pays $250 per penny of movement. That's per contract. If you've never looked at copper before, especially not so much as a day trading instrument, but as a swing trading instrument, I think you'll find some interesting possibilities there.
Yep. So the Fed meeting is coming up next week. What do
you think is going to happen? Anything?
Well, if they reduce by a quarter point, I think they're going to do that. That could be the catalyst that pushes gold up another couple of $100. And the silver, because I really believe with the structure that's developing on the gold, if we start breaking 15, keep in mind now almost every bottom in gold has produced a $20 to $40 rally upwards since May, and so the surprises tend to be on the upside. Like I say, we may still have a little bit more work to do. I don't know whether this is the real one. I said that yesterday, So, but this move up today, I would certainly give it a higher percentage that the bottom is in now for the gold stocks and potentially the metals themselves, based on the proximity to the next Fed meeting and what might happen there. So, I think if they drop the rates, it's probably going to be very positive for gold. And it's going to be interesting to see what the impact is on the dollar as well. So, and look, the drama, the Brexit drama, it looks like Friday now is going to be a key day because they're going to get, Boris has kind of they basically won approval, but they've got, it's now up to the European Union as to whether there's going to be an extension or whether they're going to exit on the 31st with a deal, with the basic outline of the deal. So, it's hard to say if they could extend it through January the 31st. You never know, or sometime between now and then. And given the technicals on the pound and the way it's acting right now, you'd have to say there's probably some further upside on the pound almost without, no matter what. And potentially for the currencies as well. So the dollar certainly has the potential to break down, either going into Friday or beyond Friday, depending on what the outcome is. And a weaker dollar is probably helping the grains a bit, helping the copper, cotton, and all the other commodities. So it's really looking. I think we could be looking at a pretty hot commodity market here in the coming months, especially if the CRB starts moving higher. And there was can you put up BIIB? Right?
BIIB, you bet.
Yeah. Biogen. This stock got knocked down a while ago really badly.
Goodness, look at that jump on earnings.
Yeah, that's pretty unusual to see that happening. To see, and it is an island bottom. So I would be watching this situation very carefully, because once it establishes some sort of a bottom where, maybe in the 280 or somewhere like that, as long as it doesn't break down, which it could, but if it looks like it's going to hold and start to edge back towards 300, it's probably a reasonable buy, this stock, because when you see something as rare as what you're looking at right now, and this is pretty rare, it could mean that there was just like a 6-month, kind of a anomaly with this company, because this company is a pretty substantial company, and it's really been a huge performer in the past. And also it could be contributing to the improvement in the LABU, which you might want to take a look at as well.
LABU coming up.
Yeah. Because, look, Dwayne, this thing is at the point of breaking a downtrend line. You've seen, we looked at ICPT and Madrigal and these other sort of high flyers. And, you sort of say, well, how can the market go up another 10 or 20% in the next few months? I think, if the dollar does get weaker, and if the stimulus efforts by the Fed and, QE4 and all the other things are going on, the odds are fairly high. And it's actually it's 5 years now since the peak of this pharmaceutical sector. And if it gets going, and you could have another parabolic up move in this sector, and that would obviously be very bullish for the market. But I think this would be, because it was like three legs of a stool, if you like. This is the fourth leg of the stool that's been missing, even though we went to all-time highs and everything in the last year or two. We did it without the pharmaceutical sector. So if this sector sort of kicks in and really starts to accelerate to the upside, I think it's going to be very positive for the market, and potentially new highs well beyond the current highs. So and look, what's going on here is you're seeing. I'm seeing one of the best charts in some time today, with copper, lumber, cotton, grains, wheat, etc., all picking up, platinum, the metals. The whole sector is starting to lift, and I think, and it can't be lifting if the economy isn't getting stronger. You know what I mean? Mm-hmm. So, and since the economy is only just starting out here, the analogy is, we're in a minor version of 2009, where most of the world markets, most of the world economies have slowed down considerably, right? And by some measures, we're worse than 2009 on a few readings. So if we're starting to lift up out of there, remember where we were in gold in 2008, 7, 8, 9, and where we ended up a couple of years later. We were we tripled the price of gold. So I think that's where we are today, and that's where we're going in the next 2 or 3 years. So the other thing is, take a look at BABA, BABA today.
Alrighty. There we go. Alibaba.
Okay. Yeah, look, it's down today, which is, not very good for China. And I think Baidu is probably similar, and Baidu's in much worse shape than BABA. But what I would be attentive to or alert to is a possible upturn from here if things get better, right? Because, you've got this BABA day, 11/11, not too far away now, and there could be a rally into that. You don't want to be buying BABA on 11/11 because it's probably going to be too late. But generally, before these big days, there is a bit of a rally in anticipation of and the odds are fairly high. You're going to have another record day of sales in China. Last year, the exponential growth in these record days over the last few years has been nothing short of staggering, and kind of make Amazon look fairly small by comparison, if you think about it. Maybe BABA is going to give us a pretty good reading on where the Chinese economy is. If they don't have a blowout day, or if they don't break a new record, could be telling.
Mm-hmm. Right.
So, and Amazon actually is not acting very well today as well. Maybe we'll take a look at Amazon for some reason.
There we go. Just the daily.
It's more likely to turn here and go higher, and maybe.
And looks like we got earnings on Friday.
Yeah, this is super critical because
unless it's, wait a minute, maybe. It's hard to tell.
Dwayne, I think the one or a group of these big earnings are going to tell us a lot about the strength of the economy. If there's any blowout numbers, and by the way, Google, if you just pull up Google for a minute, Google's actually doing well today.
There we go.
It really looks like new highs are imminent for Google.
It does.
So and remember, it took a while for the market to digest, but if they really have got this processing supremacy now, quantum supremacy processing, this stock's probably worth 2 or 3 times its current value. So, in the future. And, you got their wing thing. We looked at that yesterday. They're in everything. What people don't really understand is when autonomous driving kicks in, maybe by 2021, Google has the upgrade, ready to go. And so while new cars are going to roll off the production lines with the autonomous driving built in, everyone in the world is going to want an upgrade. I think there's going to be a huge industry, and it's going to stimulate an enormous amount of growth, because once it sort of becomes mainstream, everybody's going to want it. Why wouldn't you want to snooze when you're going down the highway, or do work while you're driving and things like that? So the numbers are staggering, because the inventory on the road that needs to be upgraded is in the hundreds of millions. It's in the billions worldwide. So, there could be, and it's going to create, service stations and upgrades to, with more gadgetry for cars is going to become a bigger and bigger deal going forward. With that in mind, we should take a look at let's look at Baidu just while we're on the subject.
Baidu coming up. go.
Yeah. Pitiful situation for Baidu right now. Just whatever happened to that company. It's crazy the way that thing's being beaten down. But, you've seen what can happen with the base. We may get a gap higher. Maybe they come up with earnings and they're better. So be ready to buy Baidu. The other thing is that take a look at Maxim. Sorry, MXIM.
I'm sorry?
MXIM, sorry, without the A. Yeah.
There we go.
Yeah. Now, this is a perennial kind of takeover target. It's, you might want to put a buy stop maybe above 58 or something, or 58, 59, 60, because one of these days this thing's probably going to go. Especially, maybe it jumps on the earnings. We have to see, but they're in a lot. The reason I bought this up is because it's it's well integrated into a lot of automobiles. There's an awful lot of automobile stuff going on with Maxim, so they're a potential takeover target, maybe by Google. Be a pretty good fit, and they'd probably go for about $80 or $90 a share. And we haven't really had a takeover target like that for a while. They've kind of held, this stock's been 60 for a while. It's been up either side of 60, but it seems to be holding in this range. So, we could be ready for a run up in 2020. The other one we haven't looked at for a while is Xilinx, ZLNX, I think. Sorry, XLNX. XLNX.
XLNX, okay. There we go.
Yeah, it had a big run up.
They've got earnings today, perhaps.
Yeah, one to watch because we did kind of gap up and we're consolidating. So, if this thing starts heading back above 100.
They might have earnings today, perhaps after the bell.
If this thing starts heading back above 100, you probably want to be long. Because I think what's going on with Xilinx has just had a correction. It kind of had a huge run-up, and this is a 5G play, one of the 5G plays. The other one is Keys, Keys.
Keys, okay. There we go.
And that's at an all-time high today, so probably still a buy based on the fact that it just went through 100. We've been when did we start recommending this one? About $50, not so long ago.
That sounds about right.
Yeah. So it's this stock really looks good. Looks better than Xilinx right now. A lot better. So I think it looks like it's poised for probably $110, $120, maybe even $130. This one.
Now, where are we at for all time?
Could you put Roku?
Is that an all-time historic high? Yeah, looks like
I believe so. Yeah. Could you put Roku? And it's going up beautifully. Look, it's got a terrific structure. This thing, very, very dynamic. Yeah, Roku is a little bit of a, it's going to be interesting to see if Roku breaks out and continues higher from here. I think that would be quite positive. They tried to knock it down a few times yesterday, but they really weren't able to break it too much. But I think if the market goes down, badly for any reason, then you'd probably want to be short Roku because it might go back down to test the 100 or even go back down even worse. So it has certainly had a great recovery from 100, but it's forming a kind of a flag. So we'll just have to see. I think the earnings come out in November, either the 4th or the 11th. So.
Which one?
Roku. I think on Roku. But anyway, so the situation is getting pretty interesting. The next few days could be very pivotal, especially with the Fed. So On the negative side, financials are making a new low today for some reason, after a pretty strong move the last few days. And the semiconductors are still negative in the TECL. Maybe we'll take a look at the TECL. It might give us a clue, Dwayne.
Which one, John?
TECL. That's a triple tech ETA.
There you go.
Yeah, you see, this is giving you a different story, a different outlook on the tech. This is what I was worried about yesterday when I mentioned the tech sector was, some of the leaders in the tech sector were coming undone. And that's a very dangerous setup that we're looking at there. Where you get a sharp break down, you get this sort of sideways, and potentially another sharp break right ahead. And remember, look, the last time the Fed raised rates, the market tanked, remember? Why did the market tank? Because it didn't do enough, as Trump has been saying. And, the argument could be, next time they should have done a half a point and get, will it be enough if they do a half point, or if they don't do anything, the market might tank. So there is that risk ahead of us right here. And even now, the VIX is starting to, it's getting close to yesterday's highs. So the market is starting to show signs of giving it up again today. And I'd be very worried. Honestly, if we break down to the lows of the day today, I think the market's in some trouble here.
I agree.
Yeah. So listen, thanks very much for the invite.
Hey, John, thank you very much. Appreciate it. And that was,
welcome.
again, going back 2 days, the interview with Diamond and Silk, that was good stuff. And
it really was.
It
was fun. It was fun.
I'm going to invite him back.
It was,
try to get him on once a month between now and the election.
No, that'd be awesome. And look, I think we covered a lot of interesting points there. The Republicans are right. They really are. This really is a kind of a stitch job that they're doing with this impeachment inquiry. The selective leaking. CNN we just learned. One of our sources just told us this, and of course, some guy says, "Oh, this is the worst day of my life in Congress if I ever started."
The drama is just unbelievable. Really
and then the other guy comes out.
Political soap opera.
The leader, or Ratcliffe, who's pretty sharp, comes out and said it's all a hill of beans. It's not worth a hill of beans. It's all nonsense, and sort of decimated the whole argument in 90 seconds rather. So this is probably, if they do go ahead with this, there was a pretty good headline in Zero Hedge this morning. I'll see if I can pick it up for you. It just basically said, well, hell is going to break loose if they do impeach, because you're going to have 63 million very angry people if that happens. You never know.
It's just a waste of time and taxpayer money, and that's all they want to do, because.
Unfortunately, when I heard about this diplomat and his 15-page intro, there's a lot of people who have their knives out for Trump, and then turn traitor on him. It's just terrible. It's just been going on, with all the leaks and all the people, and it's just so many hangers-on Obama. There's so many people in the deep state who are up to no good. It's just terrible. It's gonna, hopefully it'll all get cleaned up eventually, but the Republicans have got to win back the House in 2020, or it's going to be more of the same in the next, even if Trump does win. It's just going to be very painful. And very, and I think the American people, look, we should have had a stimulus bill. This market should be 10% higher if we had a stimulus bill by now, and the economy would be roaring if that happened.
True. No, I agree.
Yeah.
I do.
Okay,
Absolutely.
all right, thanks.
Hey, John. Thank you. Talk to you tomorrow.
Okay.
All righty. Let's pick up where we left off. Go back to... Okay, here's the Dow. Consider being long. This is the Concierge Trade Alerts. If you did not grab a screenshot and you want a screenshot, I'll put it back up again real quick. These numbers are good until the next set of numbers comes out tonight, shortly after the Globex Open, typically between 6 p.m. Eastern and 9 p.m. Eastern. Okay, got them. All right. Okay. So, 26,815, the trade to target overhead, weekly trading zone, spiked it, got a little bit above the zone, but again, when we approach a zone from above, we expect it to be good support. When we approach a zone from below, we expect it to be good resistance. So if you need help with the get in and the get out, this might just be the ticket you're looking for. The flip side of the Dow, 266.95. 266.95. So that's going to be right there. Ooh, right on the money. Okay. Now, it came out last night. This candle right here. At the open of this candle, 8 p.m. Eastern, when it triggered, every one of our traders knew that the trade to target, come on now, there we go, the trade to target right below 26670. Okay, that's a 25-point move. The Dow pays $5 per point, $125 per contract traded. Important prices, important areas are almost always tested. So we trigger again. Now this one, we didn't drop very much. We dropped from 95 down to 80. So that's 15 points, $5 a point, $75 per contract traded. Yeah. Then we get well above the trigger again, make that same trip from the trigger to the target. From the trigger to the target. We did spike that a bit, but we found support at the zone. That's what we expect until proven otherwise, which sent us right up to trigger on the long side. I mentioned earlier that some days you'll have two-sided action. You'll trigger on both the short side and the long side, such as was the case last night with the Dow. On the Russell, scoot back to Sunday night. Sunday night, right there. That candle is the Sunday night Globex Open. And we went from zone, the zone overhead, to the zone overhead. When we approach that zone from below, we expect it to be good resistance until it isn't. One of three things will happen: consolidation, rejection, or the slice. This zone-to-zone move from 36 to 44, that's an 8-point move, $50 per point, $400 per contract traded. After consolidating at this zone, We moved right on up to the zone overhead. And from 45 up to 54, that's a 9-point move, $50 per point, $450 per contract traded. So we consolidate along this zone, and after repeated attempts to get through that zone, and this candle here looked like it was going to happen, but it didn't. And we traded from this zone back down to this zone. Remember, zones are an area. We came within a couple ticks of getting back down to the zone. 9 up, 9 down, 9 back up, and here we are consolidating at the zone. Last night on the Russell, Concierge Trade Alerts said, consider being long 1562, which we never saw, or consider being short 1542, which we never saw. So no Concierge Trade Alert trigger last night for the Russell. On gold, here's Sunday night. We open right in a zone, and we trade down almost to the zone below, missed it by a couple ticks, and back up to the zone overhead, back down to the zone below. Gold been in a bit of a tight range this week. Zone to zone, a little bit shy, back to the zone, good support, back up to the zone, good resistance, back down to the zone. Okay, so last night on gold, Concierge said to consider being long 1495. So that's right about here. 1495. The trade to target. All of our traders had not only the entry, but the target. So on this, and remember, important prices, important areas are almost always tested. So we trigger 1495. 1495, and we put in a swing high at 98.1. That's a $300 per contract move. Back below the trigger, $400 per contract move. Back below the trigger, and from here, the high probability move. Let me show you. Open it up a little bit so you can see it better. Not only are we at the trigger, we dip below it, okay? When price is above the BBC, the green line, okay, you got to call stuff something. We call the green line the BBC. It means bull-bear cross, okay? For someone who's new to trading, once you explain bullish and bearish, and in case anybody in the audience doesn't know why those terms are used, bullish and bearish, when a bull attacks you, if you've ever watched a matador at work and seen him get stuck, a bull lowers his head and a fast move up, and he gores you with his horns. A bear, on the other hand, if he's going to attack you while you're sitting by the river fishing, he's going to come up behind you and he's going to rear up on his hind legs, and then he will attack in a swift down move. So if you ever wondered, what's this bull and bear stuff? There it is, right there. So, quite simply, when price is below the green line, we're bearish for the time frame being observed. In other words, once price gets below the BBC, we expect lower prices. Until when? Until price gets back above. Then we anticipate higher prices. And that scenario just repeats itself again and again and again. So I hear the gears turning, and you're thinking, well, wait a minute. If price is above the BBC, and then price gets above the zone, probably means it's trying to get to the zone overhead. That bell's for you. And we see it again here, and we may or may not see it here. Two distinctly different things about this trigger and this trigger. Here, the CFMA1, because you got to call it something, it's blue and climbing. Blue and climbing represents higher prices. That's what we anticipate when we're blue and climbing. When we're above the BBC and blue and climbing, this is exactly what we expect. Red and falling, as you can see over here, red and falling can represent resistance on the way up. Now, price pulled back to the BBC, holds more often than it doesn't, right? But we encountered resistance, red and falling. That took price down, okay? On this first trigger, we had blue and climbing. On this trigger, yes, we made it all the way to the zone overhead, but we had to get through the resistance first. See, there was no resistance here. Just cruised right on up. Blow the trigger, deal with the resistance, a little back and forth, make it through, back below the trigger. Now this time, we got to deal with that red and falling resistance. So when you're trading the Concierge Trade Alerts, and again, I never want you to trade an alert just because it's an alert, because while it might give you a profitable trade, that's not the goal. It isn't. Not really. The goal is to teach you how to trade. The goal is to teach you to take our tools, take these zones, and go make a happy life for yourself. You don't want to spend the rest of your life being dependent on someone else to point out trades for you. We want you to learn to find them yourself. Yes, we'll share our methodology and strategy with you. Yes, we'll put our tools and zones at your disposal if you're a passport holder or CFRN partner, but we want you to become the magic, okay? Because we're not magic. We want you to become your own guru. You have to learn to trust yourself. And with these tools and this knowledge, you can, okay? So the first move we said was 300, the second move was 400, and we don't know yet what will happen. Here, no one does. Because that would mean you know the future. And God just did not give man that ability. When he created Adam, he could have given Adam the ability to change the past, which means he would have also been able to know the future, because the two are inextricably linked for eternity. But in his infinite wisdom, he didn't do that. Okay? So when you come across a website or an email or any sales pitch where someone is kind of trying to create the illusion there that they actually know what's going to happen next, I assure you they don't. We don't. No man, machine, algorithm, not nothing, not no way, not no how. But here's what you can know. You can know what the next high probability move is. Saying you know what the next high probability move is a world of difference from saying you know what will happen next with certainty. Okay? So, I mean, ultimately you got to choose who you want to hang your hat with. Okay? So, let's go to the NQ. back it up to Sunday night. Here's the Sunday night Globex Open right there. Okay? No, I'm sorry, the Globex Open is right there. Okay? Right into a zone. Leg, retracement to the zone. And then a leg right up to the zone overhead. Zones are an area, so sometimes this will happen. Sometimes price will run into an obstacle that prevents it from getting to the zone overhead. Right here, we knew that the market had an obstacle in its path that could potentially prevent it from getting to the zone overhead. Made a run at it, couldn't get through, came back to support, made another run at it, couldn't get through the obstacle. And there's our slice. Remember, only three things happen at a weekly trading zone: consolidation, which I've shown you, rejection, which I've shown you, and the slice. When a 30-minute candle slices through a zone like it's not even there, when that move runs out of steam, we anticipate a retracement to the zone that was sliced through. Because this failed to be good support, like it was here, and what we anticipate, since it wasn't good support, the question becomes, will it serve as good resistance? The answer in this case was yes, which sent us down through this trigger, which took us right to the target below. Okay, and then we hit this zone. Consolidation, consolidation, consolidation. Leg, retrace. Leg, retrace. Leg. Alexa, what's 92 minus 37?
This might answer your question. 2 minus 37 is minus 35.
Oh, let's try that again. Alexa, 92 minus 37. Alexa, 92 minus 37.
92 minus 37 is 55.
Alexa, 55 times 20.
55 times 20 is 1,100.
So this is a $1,100 move down for the one contract trader, an $1,100 move up for the one contract trader.
I'm not quite sure how to help you with that.
Okay, well, just stand by. If you've earned the right to trade 10 contracts, you can do the math. An $11,000 move down and an $11,000 move back up, zone to zone. Last night, Concierge Trade Alert for the NQ, which pays $20 a point. Consider being long, 79.27. No trigger there. Consider being short, 78.30. And the swing low was 78.10 and a quarter. But we'll call it 19 points. That's $380 per contract traded. 78.30. Right there. Okay. And the long side again is up here at 27. If we trigger 79.27, trade to target right overhead, 45.46. That's a 20-point move. Yeah, 27 to 45, basically a 20-point move, $20 a point, $400 per contract traded. That's if price makes it up there. 79.27. Okay. So we've covered the S&P, the NQ, gold, the Russell, the Dow. We didn't do crude. Okie doke. So let's back up to Sunday. Here's the Sunday night. Globex open right there. We run up to a zone, we run down to a zone. This zone's at 53.95, and the zone below is at 53.20. That's a $750 per contract move. So we go from zone down to the zone, up to the zone, up to the zone, back down to the zone. This one is a $600 per contract move. 600 up, 600 down, 600 back up. We break into the next zone, and away it goes. Okay. Last night on Crude, Concierge Trade Alert said to consider being a long 54.35. Okay. So 54.35 is going to be right there. Right there. Swing high of that candle, 54.35. Not unusual. Price marches up to a trigger, either moves through it or reverses. We often see it reverse almost to the tick. Okay? So when it realizes it can't get through that trigger, where's it going to go? Back to support, consolidate, make another run. This time we make it through. So from 54.35 to 54.60, that's $250 per contract traded. For the 10 contract traders, it's $2,500. Price keeps going. We don't have an exit signal. Now you say, well, what's an exit signal? Let me show you. When you have an extended move, such as what we're seeing here, we trigger, we've got blue and climbing, price stays on the left hand side of blue and climbing. What will happen at some point when this move runs out of steam, price will start to walk sideways. This black step line will cross over. You'll notice here we hook a right and then we step up. That's what's called the step line. Hook a right, step up. See the little step, 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 step. Now you see the step line is here at this zone is starting to cross over that blue and climbing, because this is a long trade. Once the step line crosses over, as price starts to walk sideways, the first red candle that closes below the step line, that's the exit signal to the tick. Okay? We have no exit signal in sight as of yet, so any one of our traders who recognizes this is an extended move, and an extended move is anything beyond what the average swing is in the market that you're trading. If you don't know how to determine that, book a one-on-one mentoring session and I'll teach you. No charge. Okay? Whatever market you trade, you and I together will figure out what that average swing is in your market. And that will become a very valuable tool for you. Okay? So from, what do we got up here? Swing high. 55.70. Okay. Alexa, 55.70 minus 54.35.
5,570 minus 5,435 is 135.
Okay. So far, this is a $1,300 per contract move.
I don't know that one.
Okay. For the trader who's earned the right to trade 10 contracts, and you don't earn the right by just putting money in an account somewhere. By our standard, you start in SIM, you earn the right to go live, It's all laid out in our 2420 blueprint, which is designed to take you from 1 to 20 contracts over a period of 24 months. 10 consecutive days in a row where you reach your goal. Blueprint gives you the green light to go live with one contract. We then want to see you increase your account balance by $2,000 before you add a second contract. Once that happens, the whole dynamic of your trading business changes, because you're adding that second contract, not with your savings, not with a loan. You're adding the second contract, and every contract after that with profit you earned in the market. If you want to build a solid trading business, that's how you do it, right there. And the 2420 blueprint details it for every one of our traders. Okay? If you follow the blueprint, you won't get there any sooner than 24 months. Chances are it'll take you longer. If you lived in a perfect world, you might get there in 24 months. But if you're the type of person who occasionally gets sick, or has to go on vacation, or has other family or business matters that you have to attend to that take you away from the trading platform, it will take as long as it takes. Okay? But you have direction. You have a blueprint. You're never at a loss as to, well, what do I do next? Because it's all spelled out for you in detail. Now, getting out at a swing high or swing low, that's pretty difficult because you don't know it's a swing high or swing low until after the fact. That's why on these extended moves, now as a discretionary trader, you could have just taken a healthy profit right at the zone. Trigger here, target here, next target here. With me? Okay. Now, you could exit this trade anywhere along the way. But as long as price is on the left side of this blue and climbing CFMA1, why would you? Why would you jump out of a perfectly good trade? Hopefully you'll learn not to. Now that's an issue that all traders have to deal with. When we're in a trade that's underwater, we'll stay with that baby for a long time. But get a little green on the screen, and we just, for some reason, we want to take that profit and run. It's human nature. Doesn't mean you're bad. Just means you've got to retrain your brain. Change your thinking, change your trading. Change your trading, you very well might change your life. Go to eminitrainingschool.com if you're not already on the free trial. On the free trial, you'll spend 2 hours a day in our live training room, learning everything that all of our traders learn. You'll be able to use our indicators that you see on the screen for the entire trial. You'll also have access to the weekly trading zones, the Concierge Trade Alerts, Logic 247, all that and more. What's it going to cost you? Your name, your email address, and your phone number. And by the way, we value that information, so we would never sell it or share it with anybody for any reason at any price. So relax. Okay? All right. Let's see. Oh, I forgot to open the chat box. Is there a question in there? Owen asked a long time ago. Sorry about that, Owen. How about the step line? Tell me, Owen. How can I answer that for you? When you say how about the step line, I'll give you a minute to type in if you're still here. Little black line. That's a step line. Okay. You may have typed that in before I was just talking about it, but anyway, formulate your question, and I'll be sure to answer it for you before I take off. Okay, and if anyone else has a question about anything, just put it in the chat box. Now, We just went through the Concierge Trade Alerts. That's the static report that comes out every night for our traders shortly after the Globex Open. We also have Logic 247. A little different animal. It is an E-mini alert service, but instead of being based on prior price behavior, Logic is based on current price behavior. And when you have the old and the new pointing at the same important price, important area, that usually deserves a second look. Okay? Now, so far this week, with Logic 247, this is where we stand. Hang on. So far this week, since Sunday night at 6 p.m. Eastern, up through 12:30 Eastern today, we've issued 25 alerts, 2 never triggered, 1 is in the works. That gives us 22 actionable alerts. 2 of them stopped out. 9% of actionable alerts stopped out so far this week. Okay? Now, what do they look like? Let me show you. Okay. We are in week 64. Sunday night, Globex Open. When you see a thumbs up, that means price reached the target. A red X means it was stopped out. And the little Z's means it just never triggered. There's an S&P, Dow, Russell, Crude. Here's an NQ that never triggered. Gold, S&P, Dow. I duplicated one. Gold, British pound. Now we're into Monday. NQ. That crude, I guess, never triggered or in the works. It's not in the works, so maybe it just never triggered. Here's crude. There's another crude. Okay. Dow, Russell, gold, NQ, S&P. Now we're into Tuesday. S&P, the Dow, NQ. This S&P was stopped out. This British pound was stopped out. Here's another gold. Here's a no trigger. And here's an S&P, no trigger. Okay. Now, the concierge come out as a static report. You get an email, or actually I'm stopping the emails. I'm just going to put them in the Telegram channel. Okay. In the private Telegram channel, you'll see just what I put up earlier for you to take a screenshot of. The Logic 247, these come out around the clock, starting Sunday night at 6 p.m. Eastern, right up until Friday at 5 p.m. Eastern. Whenever opportunity presents itself, your phone or your computer will go dee-dee-dee. You go look at the Telegram channel, see the alert, go look at your chart, make sure you understand why it's an alert. You'll see that every one of these conforms with exactly what we teach you regarding our methodology, because the end goal is not just to give you profitable trade alerts. The end goal is that you learn to spot these moves yourself using our methodology, using our zones, and using our indicators. That's the goal. If you just want alerts, well, I suppose you could use them that way, but I'm always going to be pointing it back to learning to do this for yourself, so that you become self-sufficient. Oh, thank you, Rick. Okay, oh, and on gold, that was your question about the step line? Okay, hang on. Okay, so tell me, okay, so you said, how about the step line? On gold, 30-minute, okay. Here's gold, 30-minute. Here's a step line. I'm still not quite sure what the actual question is. Only thing I use the step line for is the exit signal. That's it. On an extended move, I use the step line as part of the exit signal. But if you have another question regarding it, please ask, and I'll be happy to answer it for you, okay? So I'll give you a minute to type in. It is starting to cross the BBC. Well, not yet. But again, it crossing the BBC, that's not something that's of concern to me. I mean, it crosses all the time. It crosses there, across there. What I'm watching is price. Okay, so if price crosses, the step line is going to cross with it. That's what makes the exit signal work. So hopefully that answers the question. And if not, type in some more, and we'll get you a better answer. Okay. And if you want some more in-depth explanation, just book a mentoring session. Okay. Anyone within the sound of my voice, if you've never had, well, if you're a partner or passport holder, you have unlimited access to one-on-one mentoring. If you're not a partner or passport holder, you can have 45 minutes, you, I, the charts, and a go-to meeting environment, just like this, except instead of having to type questions, I open up your mic and we can just have a conversation. Okay? All right. That brings us to our good word for the day. Oh, I just want to mention, Logic 247, the alerts we just looked at, over the past 64 weeks, we've issued 2,519 alerts. 2,519 in the moment as opportunity develops alerts. Out of those 2,519, 504 were stopped out. 20%. Make no mistake about it, that's the truth about trading. So, if you're beginning your journey, you really want to learn how to trade, maybe you want to learn how to trade for a living. There's a host of strategies and methodologies out there. Some kind of confusing, some very expensive. We specifically designed ours to be simple and not very expensive, within everyone's reach. Along with the methodology, along with the indicators, what the alerts do is everything you're being taught in the live training room, you get to see it unfold in a larger time frame, live in real time as it happens. That increases the learning pace exponentially. Theory's one thing. Experiencing it live in real time is something entirely different. So wherever you are in your journey right now, if you need help with the getting in or the getting out, or both, we've offered our traders over the past 64 weeks 2,519 get-ins, 2,519 get-outs. The get in and the get out. Out of those, 20%, 504 have been stopped out. Those numbers sound attractive to you. You should get a hold of Valerie. 949-42-EMINI, or send an email to support@cfrn.net. request a spec sheet and a price sheet. This way you understand exactly what you get for your hard-earned money. And once you have that information, if you want, you can book a personal one-on-one mentoring session with me or with Michael, either one, so that we can answer any final questions that you have, because you're about to make the most important trading decision of your life. Whether you decide to become a passport holder or not, I believe with all my heart it is the most important trading decision that you'll ever make. All right, good word for the day. Y'all ready for this? I am. Okay. Hang on 1 second as I prepare my notes and find them. Certainly they're here somewhere, and I will find them. And okay, look at this. Hang on. Hey, maybe I should have came prepared, eh? What do you think? That was pretty funny. All right, come on, come on, come on. I know you're here. And I'm gonna find you. I found you. Yay. That's a good thing. All right. We're going to talk about prosperity. Prosperity for God's people. John 3, 1 and 2. Beloved, I pray that in all respects you may prosper and be in good health, just as your soul prospers. The Bible presents us with this powerful truth. God, the one that put breath in your body, wants you to prosper and be in good health. Now, many people read and even believe the promise, but still wonder how to actually experience this prosperity and health. In John's letter, he describes how this prosperity is a byproduct of a life that is pleasing to God. It flows from a life motivated by love and committed to walking in truth. It radiates from those who recognize that we can hinder or even stop the flow of his blessings when we disobey him or we become dominated by pride. We see how prosperity and health can be associated with those who have a strong commitment to evangelism, those who seek to help others, and those who use their gifts to fulfill their role in fostering the health and growth of the body of Christ. I encourage you to read Ephesians 4:15 and 16. Take that into your meditation or your devotional today. Ephesians 4:15 and 16. I'm not going to tell you what it says. I want you to look it up. Now, if, as believers, if we want to experience prosperity and health, we have to be very careful about who and what influences our lives. It's very important that we seek to develop relationships with mature believers who live according to biblical standards. we also must be mindful of the things that we do with our time, our talent, and our treasure. We are called to be good stewards of God's blessings, and we're called to consistently invest these resources in His kingdom. If you want to experience prosperity and health, learn to follow God's plan, always seeking to walk in truth. Know and obey His word. Be filled with the Holy Spirit. Be motivated by love. Cultivate relationships with godly people. And be faithful to fulfill your role in the body of Christ. Part of that mission is to develop a burden for souls and to make a commitment to evangelism. Jesus never said, I want you to go have people recant this incantation or recite this incantation. He didn't say that. What He called us to do was to disciple people, to make disciples of men. That's what He commanded us to do. And there's a difference. Getting somebody to come to the front of the church and say something that they may or may not believe, or they believe it for the moment, but there's no heart change. And when there's no heart change, there's no heart change. Are you willing to invest your time, your talent, and your treasure in discipling those who don't yet know God or who have come to know Him but need discipling, need guidance, need encouragement, need someone to be a role model, to show them the standard, to help them raise the bar on their own life? It's not an easy task. There's people in my life, I've been speaking truth into their life for 20 years. And the end's nowhere in sight. But every time I see them, every time I speak to them, I make another deposit. I make another deposit. My reward won't come on this earth. But I do have a reward coming. An eternal reward. Today I encourage you to humble yourself before God and repent of any pride that's holding you back. And remember this: God blesses you so that you can bless others. That's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.